Video I want to talk about how we calculate taxes for corporations. Um, the taxes are calculated in the United States is based on essentially what's referred to as a tax bracket system. A more technical description of our tax rate is it's a progressive tax rate. That is, as you can see here, the higher the income, the greater the amount of tax that you pay. That's what's referred to as a progressive tax system. So what we want to do is talk about how taxes essentially are calculated so that we can understand how we use taxes in the decision-making process. So essentially, taxes, or a way to understand this, I guess, is that every dollar that you can earn has a tax price to it. So every dollar you make from 0 to 50,000 has a price tag of 15%. So if you made $50,000, 15% of $50,000 is $7,500. Now every dollar that you make from 50,000 to 75,000, each one of those dollars is taxed at 25%. But now we've already paid taxes or assessed the taxes for 0 to 50,000, so that's the 7,500. So our formula is, it's the base tax, the tax that you've already calculated, plus the difference between the lowest tax amount and the highest tax in that bracket, multiplied by this tax rate that's referred to as the marginal tax rate. And we do that for each bracket item. So the $500,000 is in this tax bracket. So it's $113,000 plus 34% of the difference between $500,000 and $335,000. That's the tax that you would pay. So let's look at an example. $98,000 is the taxable income. So we know that that's in this line right here, 75,000 to 100,000. So the formula, 13,750 plus the difference between 98,000 and 75,000 times the marginal tax rate of 34%. So the tax that we would pay is $21,750. So net income is just the difference between the earnings before taxes and taxes. That's $76,430 is net income. The average tax rate is a calculation of what tax do you pay on the average dollar that you make. So you take the tax rate, the tax liability, $21,750, and you divide that by the taxable income. So in this case, the average tax rate is 22.19%. The marginal tax rate is the tax that you pay on the very next dollar that you earn. So in this case, if you look at what line $98,000 is in, it's in this line right here. If you made $98,001, what would be the tax on that next dollar? Well, remember what we said. Every dollar here has a price tag, and 34%, the marginal tax rate, is the tax that you pay in that bracket. So here we see the next dollar would be taxed at 34%. The marginal tax rate is really the only tax rate that's important. If you're making a financial decision, let's take this company. Let's say you were thinking about, you were going to make an investment in an asset that, let's say that you were going to make $2,000 in profit. So the next $2,000 that you earn, what tax rate would you have to pay on that next $2,000? Well, some people would look and say, well, I've been paying roughly 22% on every dollar that I make. So I should roughly pay 22% of that next $2,000. The problem is this is an accumulation with, the actual taxes per dollar changes depending on how much money you make. So that's really not an effective way to talk about taxes. We want to always use the marginal tax rate. So in this case, the tax rate on that next $2,000 would be 34%. So you'd end up paying $680 on that next $2,000 worth of income. So now we have some numbers that we can calculate, and I've gone through this and calculated them for you. You might want to pause the video for a second and do these calculations on your own. For earnings before taxes, what is the average tax rate that you would pay? What is the marginal tax rate? Now what you'll notice is as we get a little bit higher and higher, the average tax rate and the marginal tax rate, they coincide together. That's what this graph says. So with respect to relatively large companies, typically they're going to have earnings higher than $40 million. I mean, it's a pretty small companies can even make $40 million in profit. So when we use a block number such as 40%, essentially what we're saying is, look, for companies this size, they're probably going to pay a marginal tax rate of 35%, and there's probably 5% in state and local taxes that you could add to that. So that's ultimately how we calculate taxes. Well, obviously there will be a couple of problems in the course that you can practice your skills at calculating this.